All right, in this video, we're going to talk about General Motors, ticker symbol GM. The goal of this video is to simplify it more, and we're going to try and, instead of making it a 20-minute video, try and make it a 10-minute video by going over a couple quick news articles and then move over to the valuations and over to the stock chart. I'll put a link down below to each timestamp, moving over to the valuations and then also into the stock chart. So begin. General Motors year to date down 3.5%, over the course of 1 year down 21.6%. Currently, GM has this strike going on, this union strike. If the unions want 46% increase to their wages and amongst other things as well. If that is the case, if GM has to agree to that number, that is going to dramatically impact their future profitability, especially on the EV side of things. They're already not forecasting to be profitable until 2025, and now if they have to push or increase their pricing on EVs and also obviously increase their cost expense, that's not going to help bring profitability anytime soon. GM's subsidiary Cruise is expanded and is now allowed to ARS drives in San Francisco and Phoenix, Arizona. And by the end of this year, they plan to expand that into 8 more metropolitan areas. So this could be another good source of revenue for GM in the future. Hopefully that'll offset some of the UAW wage increase. Valuations, company statistics on GM. We're sitting at a $46 billion market cap, dividend yield 1.07%, return on equity 14.8, return on invested capital 5%, gross margin 13, operating margin 6.7, profit margin 6%. Price target for analysts is $51.19. That's based on 17 analysts. They have 5% forecasted revenue growth and 5% earnings per share revenue growth. Peter Lynch valuation. Peter Lynch gives us a fair value of $67.35. Our multiples comparison gives us $81.31. Our manual PE is 10 years before we earn our current market cap. Price to book currently sitting at 0.62, a 5-year average of 1.2. PEG ratio 0.79 forward and today. Very undervalued. Graham's valuation, we're sitting at $106.97 for an intrinsic value. For DCF, we got a weighted average cost of capital of 8%. 8% comes over to here. 15% future free cash flow growth rate gives us a DCF price per share of $60.50. Rule 72, earnings per share, PE. Our lowest EPS growth rate is 4.75, which will multiply our current EPS by 0.66 times, which will give us a future EPS of 11. That gives us a fair value today of $26 with a 30% margin of safety of $18 per share. The overall summary of all of these valuations here gives us an average price of $68.43 or a purchase price of $47.90. We are right in the middle of where analysts have a price target of 51 cents or $51 per share. Over here at stock chart, we were somewhat in this channel and then things got crazy. Now we're out of this channel. We're above it, we're below it. Now we're sitting below it. Currently, we're sitting at about $33.60 a share. And this is in the midst of all the worker strike going on. Currently, what I would see and forecast, depending on what comes of the workers strike, is going to be whether or not, or what the conclusion is. What's the price increase going to be on wages? What's that going to do to our revenues? How is that going to impact their future EV pricing? They're already negative now. How much longer is it going to take before they start turning a profit? They're going to lose competitive edge because Tesla's profitable, Ford is not, and now GM is not. And now if there's a price increase, these two companies are going to be even more unprofitable, at least for even longer than what they anticipated. They're going to have to raise their prices on their vehicles, which is going to make them less desirable, and Tesla will overtake their market share. So currently, I'm looking at a potential breakdown of this stock. I think there's a chance we see $24 a share, even though this stock currently is sitting very undervalued. I think there's a significant amount of headwinds and a lot of things that need to get figured out over at GM, especially now with this union strikes going on. If it wasn't for this union strike, I think I could see it holding down here for a little while and then coming back up because this thing's very undervalued based on every single valuation except for one. So if I was to play this, I would probably wait. I would wait to see if this breaks through. If this breaks through, I'd be a buyer in this range. Based on analyst expectations, based on the valuations we got, this stock is currently undervalued without looking at any forecasted news. If you take that out of the equation, this company's trading $20 to $30 undervalued for, 100% upside, right? I think now might be a decent buying opportunity. I think there's a bunch of headwinds yet, so I'd probably wait until some of the cloudy skies clear and a little bit of sun starts shining through. Then we know a potential direction of where GM might be headed, what revenues could look like, and maybe we can begin a position after some of that stuff happens. But until then, we'll see what happens. If you like these shorter valuation videos, drop a like and a comment to let me know. Otherwise, we can go back to doing the longer, in-depth, more information videos of each one of these companies. But if you prefer the short ones where you just see the valuations and a little bit of news tied in with a little bit of my opinion on the stock chart, then let me know. But if you found value in this video, like, subscribe, and we'll be back later with another stock analysis video.